want to welcome everyone to Cost Accounting. Today we're going to cover the basic concepts in cost management, and we're going to be covering direct materials used in production, how to calculate that real simple one, prime costs and what those are made up of, conversion costs and how to calculate it, total manufacturing costs, and then finally the unit cost, which gives us the cost of goods manufactured, and then we'll get the unit cost for that product. So with that, we will get started. Over here is my information that we have. Okay, all this over here is our information. We completed 150,000 units. And then here's our different various costs that we'll be looking at. So for the direct material costs, what we start with is beginning raw materials. Okay, this is a concept you've had in other classes. You start with beginning raw materials, you add raw materials purchased, and then subtract off the ending raw materials. So with that, our beginning raw materials is 154,000. That's what we have here. The raw material purchased, we come down here to raw materials purchased is right here, 280,000. We add these two together to get what we have available for use. So we have 434,000. We want to subtract off ending raw materials of 132,000. So the raw materials used is 434 minus the 132, and make that a little bit larger so you can see it better. Okay, so 302,000 is our materials put in production. Prime costs. Prime costs are real simple. It's the two directs: direct material plus direct labor. Okay, so the direct material, you notice that we just calculated it, and that's the 302,000 that we just had here. So we had to do that part first. And the direct labor was given is 170,000. So our prime costs are 302,000 plus the 170, or 472,000. Okay. Then we're going to have our conversion costs. Conversion costs is direct labor plus your factory overhead. Okay, so the direct labor I'll put over here. Remember, we just did that, 170,000. Then we want to add the factory overhead. Well, we have depreciation on the factory equipment of 75,000. Depreciation on the factory building is 50,000. You notice I skipped the depreciation on the office building because that is not part of the factory overhead. That is what we call a period cost, and period costs go on the income statement, which is a different statement to what we're working on. So it's not part of the production process as far as costs are concerned. Indirect labor is right there, 186,000. Factory insurance, which is, here we go, 20,000. Property taxes for the factory is 50,000. Utilities for the factory is 64,000. Okay, so we add these up, and we come up with total 445, which we then add 170 plus 445, and that gives us 615,000 for total conversion costs. Okay, so that's your conversion costs, which is direct labor plus your factory overhead. Now this is not all. Now you notice the key on the factory overhead is that it has something to do with the factory, like the depreciation on factory equipment, depreciation on factory building, factory insurance, property taxes for the factory, factory utilities. If it deals with the office building, it does not go in part of the conversion costs, okay, or factory overhead, because that is not part of the production process, and that's what we're looking for, anything that costs production. So factory overhead are those costs that are associated with the production, but are not necessarily actually producing the product. Like your indirect labor would be supervisors, maintenance personnel, So that's the type of thing you would have in there for the indirect labor. They're still necessary for the production process, but they don't actually produce. Direct labor are the actually assembly line workers, the people doing the actual production of the product. Okay. Then D is total manufacturing costs. Well, these are the elements all manufacturing companies have in common. Is the direct materials, which we just did, 302,000. And then the direct labor, which is the 170. And the factory overhead, which we just calculated at 445. So if we add these up, so it's 917,000. That is our total manufacturing costs. Now, some would like to do, you cannot take prime costs plus conversion costs to get it because direct labor's in there twice. But what you can do, if you notice, you can take the prime cost of 472 plus the conversion cost of 615 and then subtract off the 170, and that gives you 917 as well. The 170, remember, is the direct labor. And the reason why you can't just simply add these two together to get it is because direct labor is in both of them. So you'd be double counting direct labor. So you have to subtract off one direct labor if you add those two together. Okay. Now, cost of goods manufactured. Okay. We start with the direct materials, which we just calculated at 302. We have direct labor, which is 170. Overhead, which is factory overhead, is 445, which we then add these up, which we already know the answer for that is 917 because we just calculated it. So you could have started with that one, but I wanted to do it. And then we add the beginning work in process. The beginning work in process is 154. Subtract off ending work in process, which is 160. Now, some will say, what is the work in process? Okay, then what we'll do is we'll come with 917 plus the 154 minus the 160. It gives us 911,000. Okay, that's our cost of goods manufactured. Now, work in process is things that you have started, but the end of the month comes, the end of the year comes, and you haven't finished them yet. They're still in process. And that's what work in process is. So if we add the beginning, subtract off the ending work in process, and that gives us 911. And then the units completed was 150,000. So to get the total cost per unit, we take the 911 divided by the 150,000. So it's $6.07 per unit. And that is our unit cost. So that is the basic concepts of the cost management. So these are the things that we'll be using all semester, and hopefully this helps a little bit, and I'll talk to you in the next video.